It's time for Stock Picks. Today we're diving into the world of luxury goods, focusing on Ferrari, Hermes and LVMH. Joining me with his analysis of these counters is David Shapiro from Sasfin Securities. David, thanks so much for your time this afternoon. So as mentioned, we're talking all things luxury, things some of us can't afford. And let's start off with your first pick, a Ferrari. I was looking at the latest numbers, revenue up 14%, net profit up over 31% in the fourth quarter. It's clearly doing well. Just walk me through your analysis on that counter.
Yeah, Ntaling, these are the kind of companies that we always focus on the bottom end of the market, affordability. These are the businesses that appeal to a segment of the population that don't really care about their income or their inflation or issues like this. And I've been fascinated by Ferrari. First of all, I have to put out a qualifying statement. I don't own any of these. I've got no LVMH.
Are you sure? Are you sure?
No Ferrari, no.
We're going to call the Hawks on you. We're going to call the Hawks.
So I have, but the quality of these business is almost incredible, because if you look at Ferrari, and they're a well-run business, not only is there do they have these high precision cars, but they also have a certain exclusivity about them that makes it very appealing for people. So why I like Ferrari is that their production is very small. In other words, they have very limited production runs, which of course enhances the appeal of these vehicles. Of course, you can't ignore their their position in the world of sport, in the world of motorsport. So it also has an appeal. So I think these are the kind of, if you want a Ferrari, you can't just walk into a dealership and buy a Ferrari. Even the second-hand cars as well have got a certain exclusivity. In fact, they cost a lot more. And sometimes you cannot believe how much these iconic cars go for. I mean, absolutely incredible value, particularly some of the old racers and that. So from my point of view, I look at the accounts very carefully. They have a limited run. They have already sold, they come out with new with new vehicles which are automatically sold out. You can wait up to 2 years if you're lucky for a car. Also, they have to, they go through whoever wants to buy it. You have to be an approved person in order to get a Ferrari. So I'm saying, hold on a sec. If they're selling whatever they make, that's the kind of company you want to own. At these levels, $3 million a motor car or thereabouts. So it's people think I'm frivolous when I actually recommend Ferrari, but when you look at the actual numbers, I mean, it's a superbly run business. As opposed to, let's Porsche, like Porsche, they make hundreds of thousands of vehicles. It's not like only 5 or 6 or 7, 8,000 a year and that. And that's why Ferrari has got this exclusivity. I'm not knocking Porsche in any way, but different kind of marketing approach.
So they are, I guess, quite better when it comes to the demand-supply dynamics. All right, let's move
you
over.
You can't get one.
Yeah. Let's move over to a company I'm more familiar with, LVMH. Now, that company's fourth quarter numbers sparking optimism about the luxury sector, with many saying that, things have changed and we could possibly start seeing earnings recovering on that front. Is that the case? Is that what you think, David?
Yes. They were taken down. Look, people forget that we're going through a very difficult time. COVID was a special time because people got money and they bought a lot of luxury goods because they were stuck at home. But in the period after that, it hasn't been easy. And also in 2022, interest rates in the United States were raised 7 times, and in 23. So we've gone from 0 interest rates to where rates are at the moment. They went up to 5.5, they're back to 4. So it did have an impact on luxury goods, particularly something like LVMH, which is slightly lower level compared with Ferrari in terms of, this is high luxury, but probably one layer below. It's got a lot of different brands and so on. But and also, of course, China brought down demand for luxury. The consumers under pressure. That's changing. You can see even today, the government, the administration in China are trying to stimulate consumption. I know this is not consumption, but I think the more people spend, the more they travel, the more they're likely to buy luxury. And this has a slightly lower aspirational value. I mean, this is aspirational at a lower level, more for youngsters. I like their goods as well. I think they're very broadly based. You know Sephora, you know LVMH, you know Dior, those guys, Givenchy, Fendi. All of these are their brands. Tag in the watches and so on, and of course, Moet, the champagne and that. So when luxury comes back, I think this is at the forefront. Much better than Kering, which is Dior.
Yeah.
We saw Dior, having problems with some of their designers, which has taken the shares down. This stands alone. I like LVMH very much as well. And I think you're buying at a decent level now.
And how much do you like Hermes, the maker of Birkin bags? Looking at their expectations, also beating estimates in those last financial numbers. I guess they're just showing that there is rising appetite for these luxury products. But then I ask myself again, how much of a risk is the secondary or second-hand market to these counters, like an LVMH on the fashion side as well?
Yeah, that doesn't affect them.
Okay.
You won't get LVMH on sale. You'll never find them on sale unless you're going down Fifth Avenue or somewhere where they're knockoffs. You might find some knockoffs there and that. But I mean, generally, it's very, very difficult to get any of these companies, on sale.
Okay.
And number one is Hermes. That stands out. Of the three that you mentioned, this is the best one. And if you want a Birkin bag again, you have to spend a certain amount at a store, and then after a 2-year wait, you get it. And as you say, the bags, the second-hand bags, go double the price of new bags. But the one thing that differentiates them is just quality.
Yeah.
These are high quality products, so they can't knock them out. They can't just make them en masse. Everyone is hand stitched and so on. And I think the same thing for Ferrari as well. A lot of work goes into the production of one of those motor vehicles. So Ling, this appeals to people we don't know. You might know them, I don't know. Who walk around with a Birkin bag at cheapest is about $10,000. So that's why I always say my maxim is, buy the shares, not the product.
Not the product. I'm looking at, I did a quick Google search here, and a Birkin bag in rands retails for about 280,000 rands. Man, what I'll do.
You've got to wait for it. There's a waiting list.
Yeah.
For these bags. So, that's why I'm saying if there are people like that who are not going to be impacted by, economic conditions, and of course the company is still well run, they maintain the quality, they maintain the desirability of these kind of bags, then don't be scared to buy the shares.
David, thanks so much for your time and just taking us through what's been playing out in the luxury sector. That was David Shapiro from Sasfin Securities.